So you have been talking about profitability. You seem fairly confident that Carsome will reach profitability this year. Talk me through why you are confident of achieving this target.
So we've been seeing consistent growth coming from not just on the volume of the transactions that we are generating, but at the same time on the margin potential has also been increasing with the help of retail business and the ancillary services. We have already achieved quite a good level of control when it comes to being more disciplined in looking at how we control costs within the entire business. So all this combined, that actually got us much more closer to a break-even level.
What's your timeline then? When are we going to get the announcement that Carsome has broken even?
So a couple of months from now, I believe that by second half this year, we'll see something.
Good morning, you're listening to The Breakfast Grille. I'm Shazana Mokhtar. Integrated auto e-commerce platform Carsome has the distinction of being the first and so far the only Malaysian unicorn, reaching the critical $1 billion valuation in July 2021. But as global macroeconomic headwinds dampen the prospects of industry disruptors like Carsome, can it maintain momentum to sustain its mythical startup status? Joining me today to discuss how it plans to navigate the challenging landscape ahead is Eric Cheng, co-founder and CEO of Carsome. Welcome back to The Breakfast Grille, Eric.
Hey, thank you. Thanks for having me.
Now, you describe yourself as Southeast Asia's largest integrated car e-commerce company. Largest by what measure? Is it by revenue, by transactions, by customer reach?
Yeah, so basically all of that. So I think Carsome, over the last 8 years since we started, we evolved quite a bit from being a platform that help you sell a car with a hassle-free manner to now encompass everything from buying and selling to financing. So we are the largest by transaction volume. So last year we sold 160,000 cars in total. That's easily like 2-3 times larger than any similar platforms or players, offline players in the market. So that's in a nutshell what Carsome is, that if you're buying a car, you're able to find quality selections from thousands of cars online. And we provide every car with a 1-year warranty, 5 days money back. So be it for you buying a car and selling a car, what you're getting out of Carsome is you get a peace of mind, right? We deliver trust in every car that we sell and every service, every transactions that happen on our platform. But going beyond that is also where Carsome is today. On a group level, we are a multi-brand family. We have presence from Carsome to being the transaction platform doing buying and selling and financing. We also have iCar Asia, who does like car classified, which is also the largest within the region. And then we also have Webcar, which is automotive content portal, and even LCT, which does car rental and independent car dealerships that we acquire in Singapore, Carsomes. So all this combined kind of gives us that full funnel of you when you're doing research, understanding what kind of car to purchase, to the point that you're looking for a car to buy from, to test drive, and eventually transacting. So fulfilling the entire ownership process, so that now if you look at Carsome today on a group level with this company combined, we are creating an automotive car ecosystem for ownerships that is powered by technology and data and our infrastructure.
Okay, so you've really expanded your presence to create this auto ecosystem, as you said. And as I mentioned at the top, you joined the exclusive club of startup unicorns about 1.5 years ago. Is this status predicated on being a tech company or an auto reseller or an automotive player? What are your valuations based on?
Yeah, so I think being a unicorn pretty much has been usually tied to, it's associated with a tech company. But in many sense, it actually means that company that goes beyond $1 billion valuation. And typically that is a fast growing company within a couple of years to achieve that. That is what being called a unicorn in most cases. I think for us it has always been a milestone, less of a end goal that we're trying to reach. Our end goal has been trying to become the largest used car buying and selling platform within the region. And how do we do that is continue to serve more customers, do more transactions, service or reach every cities that we can go to within the regions that we serve in Southeast Asia. And to date right now, with the last round that we raised in 2021, our latest valuation is at about $1.7 billion US dollar. If you looked at, I think last year where we were with the 160,000 cars that we have sold, our revenue has grown from about 650 million in the year before to last year 1.5 billion.
Okay.
Impressive growth, 2.5 times, almost 3 times. And I think that is still touching the very beginning or the surface of the market.
Okay, so from your perspective, you still have a lot of room to grow. I still want to ask though, I mean, comparing you to Carvana, a US player with similar business models as yours, they've been described as a used car dealer masquerading as a tech company. I mean, is Carsome different?
I think it's very different in a sense where if you look at Carvana, they serve in a market that the infrastructure is very much put in place. They're incumbents, they're doing things well, like CarMax serving on the car dealership level, to Kelly Blue Book, who is on the car pricing, Carfax, which is the car condition historical database. So Carvana comes in a point to reinvent how car buying can be enjoyable. Whereas Carsome operate in a market like Southeast Asia. So it doesn't have the infrastructures. It's very traditional. Mm-hmm. The next best thing beyond Carsome is the small traditional dealers who are probably selling 20, 30 cars. And most times it doesn't have a warranty attached to it. Mm-hmm. So and even if I ask you today, like how much is your car price is worth, right? You wouldn't be able to pull from a public database. So I think in that context, is Carsome grown in this environment that there is no infrastructure to leverage on. So we have to build everything ourselves.
Okay.
So the Carsome today that you see is, apart from being able to do buying and selling, we have the full set of data in terms of car pricing, car condition, and we have the largest within the space in Southeast Asia. That help us to give very accurate data points on if today your car, you come in to try to sell it, how much we're able to price it, and 12 months from now, how much the car would be. So these are the things that we are able to predict and decide within our platform, which is unheard of previously in Southeast Asia.
Okay, so essentially Carsome is in an environment that's so much different from the used car players in the US, which is getting a lot of attention right now. They've been really badly hit by global economic conditions. I'm wondering how much of those economic conditions are also replicated here in Southeast Asia. So if you look at demand, right, we know that it's the end of ultra low interest rates. That means getting car loans are more expensive for prospective car buyers. Demand for used cars is also affected by auto supply chains normalizing their car supplies and new cars becoming more available. How much of these trends do you see impacting your business here?
Yep. I think it's very interesting questions, and especially if you look at Southeast Asia, the market that we operate in is a very different car market compared to a market like in the US, where car population is still rising in Southeast Asia, generally speaking. If you look at all countries that we're in, Malaysia, Indonesia, Thailand, Philippines, the car per thousand capital, car ownership per thousand capital, is on average only at about 200 over. So compared to like in the US, is way above 500 to closer to 800. So you see there's a small car ownership that is still rising. Mm-hmm. And there's a lot of room for this to grow, especially if you look at the disposable income of the populations within Southeast Asia has been growing. And if you draw examples like in China, in all the last 10 years, you see how car ownership rise together with the disposable income. And that has contributed to a lot of growth within the car markets. So we're seeing that in Southeast Asia. And we're seeing that grow in the next couple of years even more aggressively, which we think we are quite confident towards how we think about growth in used car market or car market in general would be a lot more favorable. Mm-hmm. So it's also one of the regions that globally that still have growth potential, which is something that I think we are quite looking forward to. Yeah.
So in the used auto reselling segment, Carsome operates a wholesale B2B and a retail B2C model. What's the present split between these two segments?
Yeah, so wholesale business has been around since we started in 2015. So naturally, that has also be the big revenue contributor for the business. Whereas retail business, which is our certified brand, Carsome Certified, rolled out in about 2020, 2021. So about 2-3 years now. That has becoming a really fast-growing contribution contributions when it comes to revenue, transactions to our business. So where we are today, if you look at last year revenue, retail business is about 40% to our total revenue contribution.
Okay,
So
40%.
40%.
An increase from the 30% of the previous year.
Yes. So in the last 2-3 years, it has grown so much so quickly. I think partly because there wasn't a used car brand within the market. So that gives you that top of mind. When you think about buying good cars, quality cars with a peace of mind, you come to Carsome because we have thousands of selections to choose from. And I think worth noting that now we also created a mobile applications, Carsome app that you can download. You can keep track of everything within your life cycle. So from you financing, getting insurance, and recently we just rolled out our after-sales service, maintenance. So all this is you're able to keep track of the progress within the application. So that gives you that ability not just to buy a car with Carsome, which post-sales, we are able to continue facilitate, continue to keep you informed,
right,
and all the way to the next car.
I see. So you have this mechanism or this ecosystem where you stay with your customer all the way from purchase point to that end point.
Yeah.
I'm wondering, does the retail segment cost more to run? After all, you have to keep inventory. You also operate brick and mortar stores, which the number you're growing. How much does this contribute to your expenses?
So definitely, I think in terms of where retail business is, it requires us to set up reconditioning facility. That is because if you think about being able to put thousands of cars on our platform, and these cars are all gone through refurbishment, it requires us to be able to recondition car at scale on a consistent manner. So, and if you look around in the region, there wasn't any facility that's allowed us or enabled us to do so. So we created our own facility called the Carsome Certified Lab. We have one each in every country that we're in.
Just one?
Just one each. Yeah, so we have 3. And each of it can produce or refurbish 2,000 cars on the monthly basis. So that gives us that accessibility when it comes to able to put up cars on our platform with quality assurance, and that flows into the 1-year warranty and eventually to the maintenance and so on.
So does doing this in-house reduce costs for you?
So doing this in-house definitely reduce costs to us. There are requirement for us to invest upfront to set up this facility, having the equipment ready and set up the entire layout, including the workforce. But over time, it comes back with a very strong ROI. Especially if you think about how they continue to grow our business. Retail business has a much more bigger revenue potential and margin potential, not just on you being able to sell the car, but also being able to attach ancillary like financing, insurance, maintenance. So these are the things that where retail business become extremely attractive in completing the cycle of where we from selling to buying and continue repeat the cycle again and again.
In terms of consumer trends and preferences, are you seeing customers return to in-person shopping for used cars? Have your online sales decreased as consumers maybe prefer to go to stores to actually buy used cars?
Yeah, so definitely is here to stay, right? I think there are people who would prefer completely doing things online. There will be people who still very keen to have this at least test drive the car once before they make a purchase with us. So the approach that we took is to have that hybrid offerings. So from the technology offerings, like the platform being able to see the cars on the virtual showroom, looking at the imperfections from the photos, the inspection report, to coming to the centers or even the auto mall to view the cars. So have that in-store kind of shopping experience. I think having the best of both will make this business work. And this is where we think that we serve different set of customers who have the needs when it comes to looking for cars in the market and even selling it. We assure them with a seamless experience that be it online or offline, we are able to cater for it, and it doesn't get lost in translations. So what you have done online, we can translate it into the offline experience when we deliver the car to you. So it's not just looking good online, and then when you got a car from us, it's a bad car quality.
How much inventory do you hold? Because I presume the retail segment does rely on having a sizable amount of inventory in order to be able to cater to what customers want at that time. So what's that size?
So every country, we have a couple of thousands of cars that we hold.
Couple thousand
in our inventory.
In the teens?
Yes. So what that means basically is that how quickly we turn this car into a transaction. So inventory turn days become metrics that we keep very close eye on, and we've been improving that very well. To the end now, we are about close to 2 to 1. So every transactions, there's 2 inventory on our platform. Yeah. So, and I think the only ability for a company to do that, a platform to do that well and continue to shorten it, is that you are able to price a car accurately and able to have a selections and assortment that when you look at it, you're able to find a car that you like. Because you can come to a platform that there's 10,000s of cars to choose from, but knowing anyone who's looking for a car, typically they already have a budget and the kind of car they're looking for, body type, color, and so on. So is to be able to have that the quick access to finding that car within the thousands of selections, so that we can we can get a car and have anyone to find a car from this platform, from this inventory that we own. So that's the kind of thing that we do well.
What do you do with the cars that you can't sell? Is there an impairment policy that you have?
So we have wholesale and retail business. So in the event of if you can't sell a car, you can always dispose it through the wholesale platform. But this is very minimal, like almost close to non-existent, because of how we have handled the whole transactions from wholesale to retail, understanding the demand in the market, and see how we should sell this car, be it through the wholesale channel or through the retail channel.
Now, Eric, earlier we were talking a little bit about the market conditions of the business, and you were talking about how Carsome has built itself as an end-to-end solutions provider for car buyers and dealers. You offer in-house inspection and refurbishment services, as we just discussed, but are you also looking to offer financing at some point? And is that the thinking behind partnering with CAF Investments in its digital bank consortium?
Yeah. So we have been offering financing over the last 4 years already, especially in Malaysia. So the company is called Carsome Capital. And we've been doing that, facilitating financing to consumers who are buying cars from us, and also the dealers who are procuring inventory from our wholesale platform. So with the digital bank CAF consortium that we have take part, that help us to fulfill this ambition to be able to provide more financing accessibility to people who are buying cars from our platform. So that's one way that we think about how do we reinvent and make it a lot more innovative when it comes to not offering not just on car buying and selling, but also through the ancillaries like financing, insurance, and so on.
Can you walk me through how being part of this consortium will expand your ancillary services and financing? Like, what are you thinking about? What are the strategies that you have in mind?
Yeah. So I think one big part of the objective for the digital banking consortium is to be able to serve the underserved, right? The community that has always been trying to get more financing, but the traditional bank infrastructure, the setup has not been able to allow them to do so. And because of how that setup has been, put in place for a digital banking framework, it allowed us to also tap onto the customer pool that we have within Carsome, which a big part of them, when we looked at where they're trying to purchase a car in our platform, they face financing difficulties. So we believe that this, with the solutions that's been put in place, proposed within that whole consortium setup when we launch, would allow us to be able to serve more customers and another financing alternative when it comes to anyone buying a car in the market.
So you have these in-house loans that Carsome offers in addition to those offers by banking partners, I presume.
Correct, yes.
How do you manage your risk then? Because you are giving loans to a consumer segment that is understandably more risky by the view of traditional banks.
Yeah. So I think one thing is we've been doing this for 4 years now, and our MPL is less than 1%. It's very low, and probably even lower than some of the banks out there. And the main audience pool that we're serving is from mid-prime, subprime. And if you think about how we are able to manage this well, it's not just the team effort, but also at the same time, our ability to assess what's the actual car value in the market based on the activities from our platform, the transactions that has been done over the past couple of years. So we're able to assess not just on the standpoint of how the customer credit profile looking like, but at the same time, what the actual car value of this car in due time, let's say 6 months, 12 months, or 24 months from now, if it comes to a need to repossess or dispose, what is the right price for them to sell?
Okay.
And because we own the platform, we're not just doing financing. We at the same time own the largest transaction platform. So which means essentially we have the supply and we're able to distribute to the largest demand in the market as well. That provide us the ability to also provide different solutions to our customers so that they can exchange for another car, maybe downgrade to fits their budget. And I think these things become something that is very unique offering compared to the banks or the non-bank in the market.
Okay. Coming back to the digital bank, how much of a stake does Carsome hold in this consortium?
So we are minority, so we're not the main driving force, but we are a big contributor when it comes to able to add more synergies, revenue, and especially customer base when it comes to onboarding customers on the digital banking launch.
And is there a timeline in terms of when we're going to start to see services being rolled out by the digital bank? Is there a name for the digital bank?
So it's definitely CUF, right? And I think in terms of launch is in the next couple of quarters. It should be very soon.
This year, 2023?
Yeah, so either end of this year or next year. So timeline should be one of the fastest for sure.
So last year, Carsome raised $290 million in Series E, as you mentioned. What was this amount used for? Maybe walk me through the expansions that you did over the past year with this investment.
Yeah. So a big part of it is to be able to help us expand the retail business and also, being able to create a larger platform out of what we kind of ambitions that we try to be. Is that if you look at Carsome today, with that revenue that we have generated last year, we at about 2-3% of the market, right? So a lot of the use of proceeds when it comes to raising the funding is to first be able to help us continue to bridge that gap to get to 10% in the next couple of years. What that means is we invest in areas on our technology, our data, on building up the awareness, and some of it went to expanding the business on the infrastructures. And some of it also from the activities of how we invest into companies that can be part of the larger ecosystems that we owned. So I think a big part of it is to be able to continue grow the business, to be able to grow a business sustainably. And I think to that end also, over the last couple of quarters, we've been having cash flow positive within the business, which is an extremely positive sign when you think about us going into a break-even mode, which that would be achieved in the next couple of months.
Okay, I'm going to press you a little bit on that, but I do want to ask about your marketing costs. How much of marketing costs do you have? You appointed football star Eric Cantona as your brand ambassador last year. That must have cost a pretty penny in the expense column.
No, that's still okay. On the grand scheme of things, if you look at how much that take place within the whole marketing budget is not anything more than like 20% of the total. So a big part of the marketing comes from how we position ourselves in the market, that the value propositions has to be strong and all. So we actually don't spend that much on the percentage of the revenue when it comes to marketing our business and creating awareness. Instead, we focus a lot more on increasing the technology investment, the data investment, because we believe that is a big part of what we are doing, that we can have more organic reach of customers. So having a ambassador like Cantona helps in generating the buzz within the region that is recognizable across different countries. But our focus of our marketing investment has been always been creating the unique value propositions of the company, which is what we do for buying and selling with quality cars.
So you mentioned that your revenue has doubled from the past year, but that hasn't really been enough to avoid cost-cutting measures in the form of layoffs. You let go 10% of your workforce in September last year. So was this the result of an overhiring spree during the good times?
So it's way less than 10% for sure. Yeah. So and to date, right now, we still have over 4,000 employees. So it's still a large size that we have. And a big part of that exercise wasn't because over hiring. And a big part of that is coming to a point that we understand that where the market is heading in the next in 2022 and 2023. So we want to be able to position the company well entering 2023 this year, that we have done all the right measures for us to optimize our cost base, for us to go for more growth, so that this year, when you look at Carsome, we're able to achieve our first year of profitability. And that's something that we have done well over the last couple of quarters to the months that we're looking at in the next this quarter and next quarter. We should be able to reach there quite soon.
You, I think the executive management forgoed salaries in order to pay for severance packages in 2022. I presume you're back to receiving a salary now?
Yes.
How many months' salary did you have to forgo?
So I think a couple of months. Yeah. So it's really just a show for commitment. At the same time, I feel it's important for us to take part on this whole exercise. And I think that fare well with keeping the team morale up as well at the same time.
Okay, so you have been talking about profitability. You seem fairly confident that Carsome will reach profitability this year. Talk me through why you are confident of achieving this target.
I think firstly, a function of how we can get there is the growth continue to be there for the business. So we've been seeing consistent growth coming from not just on the volume of the transactions that we are generating, but at the same time on the margin potential has also been increasing with the help of retail business and the ancillary services. So this thing has been, things that we prepared over the last year, and we start to see that coming into fruition this year for the business. I think the other thing is also we have already achieved quite a good level of control when it comes to being more disciplined in looking at how we control costs within the entire business. So all this combined, including optimizations on productivity, on the people, that actually got us much more closer to a break-even level. Mm-hmm. In fact, actually, we were not too far away last year. So we wanted to really bridge that closer instead of our earlier target was, going profitability in the next year. Now we bring that forward to a year, which, has been something that we very much focus on this year.
What's your timeline then? When are we going to get the announcement that Carsome has broken even?
So a couple of months from now, I believe that by second half of this year, we'll see something.
Second half of this year. Okay. Let us talk about your IPO. So Carsome scrapped IPO plans in the middle of last year, citing macroeconomic conditions. If we look at what's happening globally, these conditions aren't likely to ease anytime soon. Is your IPO plan then indefinitely delayed?
So as a company, we are always ready. I think that's something that we always want to prepare ourselves that in the case of the next milestone is for Carsome to be able to go public. So the focus remains to be able to put ourselves in the positions that when there's a window, we're able to be one of the first to go out there and make Carsome going public. So market condition definitely has been a lot different compared to before. And like you say, I think in where we are today is we probably see this continue throughout the entire year. So one thing that we do as a company is to be able to get ready for that next window.
What are the indicators that show you that the window is opening? How do you know that the window is there?
I think you need to first see a few good IPOs in the market. That kind of gives you the understanding that the market is now going back to a positive sign that welcoming or embracing more and more IPOs. And I think overall that's the kind of signs that we've been trying to get with also talking to the bankers, talking to different partners within the scene.
Okay.
I think thankfully is we have good existing investors, shareholders that are very supportive towards us building this company.
Okay, they're not pressuring you to exit.
Not really, right? So they have been trying to support the company in ways that we can build this into a much more bigger business. Mm-hmm. And I think that has always been the focus over the past couple of years.
So where do you think you'll be listing? Because initially it was reported last year you were looking at the US and Singapore. I think we can see that there aren't that many successful examples of listed used car players in the US. The bulk of them have seen their prices plummet 90% from their debut. Is the US still a market that you're targeting for listing?
So we don't have an obvious first choice, right? If you think about it, I think the ideal market for us to go public definitely has to come with good liquidity, and at the same time able to appreciate companies like Carsome, the business model, and have that understanding on how that growth engine kicks in, right, for the business. And then we look at like public exchanges like this, is we have actually quite a couple of them who have reached out and spoke to us, very interested to bring us on board. I think, like I said earlier, that there's no rush for us to do that right now. More so is looking for a good timing, good opportunity for us to do so. So we don't exactly need to make a decision for now.
There's no target date.
Those are the criteria.
Okay. You've entered 4 markets in Southeast Asia so far. Are you looking to expand further in any other countries? Or are other countries in your crosshairs at the moment?
Yeah, definitely. I think there's 2 parts of the business, right? If you think about us right now, is over the existing markets, we are growing very well, but it's still very early phase. If you think about market share, like we are still 2-3% of the overall market. Despite Malaysia, we have about 20% market share already. So there are markets that we're exploring at the same time. So in fact, like in Philippines, we have started a pilot operation. So we have a small team in Philippines that is starting to do test run, and I think the early signs of that is going to be, is very positive, just like another markets that we're in within Southeast Asia. So there are more markets that we're looking at, but generally that's the first bucket of how we think about market expansion, right? So the other part is also vertically how we are expanding the business from the ancillary standpoint. Like on the transaction level, we've been doing well and amassing more and more transactions, more cars being sold. Vertically, we are trying to attach also more ancillary revenues into every service that we offer. For example, like maintenance that we just roll out, that has very quickly become a good contributor. Financing is also a big part of the business that we think we could add a lot more margin potential to the business. So these things, if you looked at the Carsome platform today, the main revenue contributions mostly come from transaction, which if we could see further growth coming from the ancillary side of the revenue, we could easily just grow the transaction or the revenue to more than double to where we are today.
Okay, so you're really going to be focusing on that rather than geographical expansion for now. There's a lot of room in terms of services that can be expanded. Maybe let's end on this question, Eric. Carsome, the only unicorn in Malaysia, what would make Malaysia a more fertile ground for unicorns to grow? Why has Malaysia been so infertile when it comes to, I guess, allowing these startups to expand?
Yeah, well, I think it has proven that Malaysian talent has always been good talents in the space, right? Be it from tech to globally, you see different verticals, different industry has really good talents coming from Malaysia. So naturally, Malaysia has the right people for you to build a good business, a successful business. And I think the market itself is a good test bed when it comes to jumpstarting in other countries because of the market dynamic is quite identical, quite similar. So being excluding the localization part, pretty much what you built in Malaysia would work very well in a lot of other markets. So I think what is lacking is coming from 2 things, right? One is the entrepreneur themselves has to be a lot more ambitious. I think ambitious in the sense that you're not just building a business in Malaysia, but you aspire to build this into multi-countries, a much more bigger business than just being in one market.
Okay. I
think entrepreneurs need to take a little bit more risk, calculated risk, right, to see how they can grow this business and capture the opportunity. But on the other hand, it's also, there has to be a lot more growth funding in the space. I think we see a lot of funding or investment going into the early stage when it comes to finding product market fit. But going beyond, like when it comes to growth or potential, growth opportunity, it's that capital to be able to support that aspiration, right? So I think that is somewhat lacking in Malaysia compared to a lot of other neighboring countries.
Okay. Well, Eric, thank you so much for sharing your insights and the prospects of Carsome. We wish you luck and look forward to the next conversation.
Sure. Thank you so much.
I've been speaking to Eric Cheng, co-founder and CEO of Carsome. This has been The Breakfast Grille on BFM 89.9.